Picture this: a world where your cash is replaced by digital currency, controlled by the government. Welcome to the future of money, Central Bank Digital Currencies or CBDCs. Just like the rise of the internet transformed our lives in the late 20th century, the rise of CBDCs is set to revolutionize our financial systems in ways we have yet to fully comprehend. Around the globe, central banks are exploring, and in some cases already piloting, these digital versions of their national currencies. But what exactly are CBDCs, and why are they garnering such interest? CBDCs are essentially a digital form of a country's fiat currency, issued and regulated by the central bank. Unlike traditional cash, which requires physical handling and storage, CBDCs are designed to exist solely in the digital realm. This has the potential to increase efficiency and reduce costs associated with cash management. But the benefits of CBDCs don't stop at efficiency. Proponents argue that they can help achieve greater financial inclusion. By enabling every citizen with a smartphone to hold and transact in digital currency, CBDCs could provide access to financial services for millions of unbanked or underbanked individuals around the world. Furthermore, CBDCs are touted as a tool to combat financial crime. By tracking the flow of digital money, authorities could potentially clamp down on illicit activities such as money laundering and tax evasion. Despite these appealing prospects, it's essential to remember that CBDCs are still in their infancy, and their full implications remain uncertain. As we move towards a future where digital currencies could become the norm, we must grapple with critical questions about privacy, control, and the very nature of money itself. But as we venture into this brave new world of digital money, one question looms large. What does this mean for our financial freedom? As we peel back the layers, the shine of central bank digital currencies begins to tarnish, revealing a darker side. While CBDCs promise a seamless digital future, they also pose substantial risks. The most glaring of these is the potential for increased surveillance. In a world where every transaction is digital and centrally recorded, privacy as we know it could vanish. Imagine a scenario where every purchase you make, every penny you earn, is monitored and logged by your government. This level of surveillance could provide an unprecedented window into your personal life, habits, and preferences. But that's not all. CBDCs could also enable governments to exert control over your access to funds. In a cashless society, your ability to spend or save could be at the mercy of policy changes and political whims. For instance, consider a situation where an administration decides to freeze the assets of certain individuals or groups. With CBDCs, this could be done with a few keystrokes, leaving those affected with no recourse. Another concern is the susceptibility of CBDCs to government manipulation. Central banks could use these digital currencies as a tool to implement monetary policies, such as negative interest rates, more aggressively. This means that not only could your savings be devalued, but you could actually be penalized for holding onto your money. Take China, for example. The country's pilot digital yuan project gives the government an ability to control its citizens' spending in a way never before possible. It's a stark reminder of how CBDCs can be used as a tool for economic control and surveillance. In short, while CBDCs may offer some benefits, they also risk amplifying some of the most concerning aspects of centralized financial systems. They may lead to an erosion of privacy, an increase in surveillance, and a greater vulnerability to government manipulation. So, if CBDCs are a potential threat to our financial freedom, what's the alternative? Enter cryptocurrency, the antithesis of centralized control. A beacon of financial sovereignty, cryptocurrencies offer a compelling alternative to traditional financial systems and central bank digital currencies, or CBDCs. At the heart of cryptocurrency is decentralization. This means that unlike CBDCs, no single entity or authority has control over it. There's no central bank to dictate the rules, no government to manipulate its value, no third-party intermediaries to trust. Instead, cryptocurrencies operate on a network of computers, each participant having an equal say. It's a democratic financial system that focuses on financial inclusivity and fairness. What makes cryptocurrency so resilient is its censorship-resistant nature. In a world where a tweet can be deleted, a website blocked, a transaction reversed, The ability to transact freely and openly holds immense value. Your transactions are your own, immune to the whims of any central authority. This is a stark contrast to CBDCs, where every transaction can be tracked, traced, and potentially controlled by the issuing authority. But the real power of cryptocurrency lies in its ability to empower individuals with financial sovereignty. It gives you the autonomy to manage your own wealth, make your own decisions, and chart your own financial journey. You become your own bank, free from the confines and restrictions of a centralized system. In terms of security, cryptocurrencies leverage advanced cryptographic techniques to ensure the safety and integrity of transactions. This level of security is often unmatched by traditional financial systems, and certainly superior to the potential vulnerabilities of a centrally controlled CBDC. In essence, cryptocurrencies offer a level of autonomy, security, and resilience that is fundamentally different from the centralized control inherent in CBDCs. They offer a vision of a future where financial power is returned to the people, where trust is built on transparency and consensus, not on central authority. But what does this mean in practical terms? Let's take a look at some real-world examples. The power of cryptocurrency isn't just theoretical, it's already making a difference in people's lives around the world. Let's take a moment to explore some real-world examples. Picture this. A country is in the throes of a political crisis. The government decides to freeze all bank accounts to maintain control. Sounds far-fetched? Well, it's happened before. In 2001, the Argentine government implemented the infamous Corralito, trapping citizens' savings in banks and leading to a massive financial crisis. In such a scenario, a decentralized currency like Bitcoin would have allowed individuals to retain access to their funds, regardless of the government's actions. Or consider this. A citizen is vocal about their government's policies, leading to their financial resources being cut off as a form of censorship. We've seen instances where individuals are deplatformed and financially ostracized for their political views. Cryptocurrencies, with their censorship-resistant properties, provide a solution to this form of financial weaponization. Now, let's address a common misconception. Some people associate cryptocurrencies with illicit activities, painting them with a broad and unfairly negative brush. While it's true that, like any technology, cryptocurrencies can be misused, the vast majority of crypto transactions are legitimate. In fact, a report by Chainalysis in 2021 found that less than 1% of all cryptocurrency transactions were linked to illicit activities. To put that into perspective, the United Nations estimates that 2 to 5% of global GDP is connected with money laundering and illicit activity, much of it through traditional banking systems. So, it's not about the technology being inherently good or bad. It's about how we choose to use it. And when used correctly, cryptocurrencies can empower us, giving us more control over our financial destiny and acting as a safeguard against centralized control. As you can see, cryptocurrency isn't just about making money, it's about protecting our financial freedom. So, what can you do to safeguard your financial freedom in this digital age? We're living in a time where technology is rapidly reshaping the world, and our financial systems are no exception. As we've seen, Central Bank Digital Currencies, or CBDCs, while appearing to offer convenience, come with a slew of potential risks, including increased surveillance, loss of privacy, and government manipulation. On the other hand, there's cryptocurrency, a decentralized alternative that offers a level of financial sovereignty unheard of in traditional banking. It's like having a Swiss bank account in your pocket, accessible to anyone with an internet connection, no matter where you are in the world. Cryptocurrency isn't just about making quick profits or buying a Lamborghini. It's about taking back control over your money, your privacy, and your freedom. It's about shielding yourself from inflation and currency devaluation, especially in regions with unstable or authoritarian governments. Take, for example, Venezuela, where hyperinflation has rendered the national currency nearly worthless. In this dire situation, cryptocurrencies like Bitcoin and Ethereum have become a lifeline for many, allowing them to protect their savings and even conduct daily transactions. Now, you might be thinking, But isn't cryptocurrency used for illegal activities? It's a common misconception. The truth is, the vast majority of crypto transactions are perfectly legal. Moreover, the transparency and traceability of blockchain technology actually make it a poor choice for illicit activities. Cryptocurrency is a tool, and like any tool, it can be used for good or ill. The key is understanding and using it wisely. So I encourage you to learn more about cryptocurrency, to dive deeper into this fascinating world of decentralized finance. There are countless resources available, from books and online courses to forums and social media communities. Remember, the goal isn't to become a crypto millionaire overnight. It's to take control of your financial future, to protect your hard-earned money from the whims of central authorities. The future of money is here. It's time to choose. Will you embrace financial sovereignty or surrender to centralized control?